Hi guys, so today I wanted to dive really deeply into the whole property market price-wise, from the lower end to the top end, and how here in Oxfordshire the property market is holding up despite all of this doom and gloom in the newspapers. So the Oxfordshire housing market over the last 3 months is now becoming more normal, I guess, after the last couple of years of insane demand when the lockdown started a race for space. Even with the blackening economic doommongers forecasting a harsh slowdown in the British property market, the number of people buying and selling their homes is still very good, in my opinion, for this time of year. And whilst many homeowners, they are reducing their asking price, it's nowhere near the 20% and some even said 30% drop that some commentators and newspaper journalists had actually predicted. And looking at the stats here for Oxfordshire for the last 3 months since the disastrous Trust mini budget, they make good reading. Of the 407 Oxfordshire properties that have sold since late September, the average length of time it took to achieve a sale was about 63 days. And it's interesting when you split it down by price. In Oxfordshire, 100k to 200k is 56 days, 200k to 300 is about 103 days, 300k to 400k is 73 days, 400 to 500k is 65 days, 500 to a million, 41 days, and a million and above, which we deal in, is about 75 days. And the latest sold price data from the Land Registry shows that Oxfordshire house prices currently remain 9.7% higher than they were 12 months ago. The rate of growth has dropped significantly, and last month Oxfordshire house prices only rose by 0.8%. So we are seeing the first sign that the property market is starting to cool down, with interest rates at 3.5% and further increases likely in 2023 that will undoubtedly spur ongoing cooling in the Oxfordshire property values. Yet it's doubtful that we're actually going to see the Oxfordshire property market go into this deep freeze that many doom mongers were predicting. So as I've said in many recent articles on the Oxfordshire property market, we will see a 5 to 10% reduction in house prices over the next 12 to 18 months. And that will only take us back to the prices achieved in mid-late 2021 or early 2022, depending on the property type. Landlords have experienced double-digit rent growth in the last 12 to 18 months, with a shortage of rental properties coming onto the market. And I can't actually see this changing in the short term, so I expect rents to be a further 10% higher by Christmas 2023. And last week I stated that it's not always wise to only focus on house prices, but also take reference from the number of property transactions completed that feeds the fire of the British property market. So, for example, in March of 2021, 135,000 properties sold, yet a month later it dropped to 87,600. A couple of months later, it rose again in June 2021 to 165,000 homes sold, for it to drop to 64,000 in July. Whilst this is good news for estate agents and removal companies, it can actually skew the property market and put undue pressure on the property market, pressure which could cause a housing crash if not put under check. But like most things, slow, steady and consistent is the preferred option for the property market. And throughout 2022, the number of properties selling in the UK has been a steady average of 68,000 per month, ranging from a low of 61,000 in January 2022 to 72,000 in July 2022. This consistency will continue into 2023 and a return to a more normal housing market. And one thing I have noticed about the property market in the last 6 months is the number of larger properties coming onto the market that last sold over 25 years ago. Homeowners in their 20s, 30s and early 40s tend to move every 5 or 6 years, yet when they reach their late 40s and 50s, they tend to stay put for a lot longer. These properties only tend to come on the market when people unfortunately pass away or must be sold for nursing home fees. So these mature homeowners are downsizing for several reasons. Their children have flown the nest and they are rattling running around in homes with accommodation that they just don't need. Many are being driven to sell their large homes in light of mounting energy bills or high inflation and never-ending maintenance costs that larger properties demand. The second reason is that the recent rises in Oxfordshire house prices has meant that money is released to downsize has grown, meaning if these mature homeowners sell up and cash into more manageable properties, the amount of money released is pretty impressive. So in conclusion, 2023, in my opinion, is going to be a more normal year akin to the 2016 or 2019 years. Oxfordshire homeowners need to be realistic with their pricing, yet as over 8 out of 10 sellers buy another home, the one you buy will actually be lower.